This conference will now be recorded.
So now we are beginning the process of reviewing financial accounting, because when we get to managerial accounting in a couple of weeks, it assumes you can do this. And so what I needed to do was to go through, give you a problem. You only have 14 journal entries, so you know that you're 2 minutes to a journal entry, but I had to see where you had some issues and problems so we could get those corrected now. Kayla, why don't you go to your financial statements for me first? Go to your income statement and balance sheet. Okay. So you showed net income of what? 576,800. And you showed the ending retained earnings of 398.
Yeah, 398, 680.
All right, go to your balance sheet for us. And what are you showing on your balance sheet?
Well, you asked for a beginning balance with what you gave us, and the end of balance with what everything was after you put in the journal and stuff.
Okay, so what I'm doing here, we're gonna go back to the problem, but at the end of the day, remember you were supposed to prepare a financial statement. So how does this company look if you look at their financial statements?
I mean, it looked like they made money, but their cash balance is in the negative.
Mm-hmm.
So, and then last year, well, at the beginning balance, they didn't have any retained earnings at all. So, I mean, they made money. They're in the positive now, but they didn't have any to begin with.
Okay, so they didn't have any to begin with. They don't have any cash.
But
So
yeah, now they don't have any cash.
what you gonna do for this company to make sure it has some cash?
I don't know, sell some stuff?
Anybody else?
Invest in it.
So remember now, we look at the financial statements and we see a company that has cash of a negative $20,000. What's the balance in cash supposed to be typically as an asset? Supposed to have what balance?
A debit balance.
Okay. Are there any other accounts that look like they may not have the right balance?
Yeah, accounts payable.
Okay. So this company went and overpaid. So this just like you got a credit card and you overpay it. Okay. So that's what we see now. So remember now, this is what we see. So let's go back to the beginning of the problem. You have the problem of Kayla itself.
Yeah, let me get it real quick.
Okay, so let's just stay here with these beginning balances. So someone asked about beginning balances. So this is, you know, when we work with a company, when we have that first year, when we have prior years, these balances are in there. So now you're working with an existing company and it had a bunch of balances and retained earnings was the missing balance. So to get retained earnings, we just put it in what? That equation, asset equal liabilities plus common stock plus retained earnings. And so let's see how we would do this. Accounts payable, what's the normal balance for accounts payable?
Credit.
Can you put a column on that? Can you add a column, Kayla?
Yeah.
Okay, so now we're gonna go through these accounts. Accounts payable normally has what kind of balance?
Credit.
All right, so you can just put C. All right, Okay, what about accounts receivable?
D.
You mean D, right?
Yeah, D.
Inventory,
That'd be D.
equipment,
D.
notes payable.
C.
That's correct. Cash,
D.
cash is debit. Accumulated depreciation.
Mm,
Mm,
that one is D.
no, that's
No, it's C. It's C. I'm sorry. C.
C. Notes payable
C.
and common stock.
C.
Right. So to get retained earnings, you add up the D's, you add up the C's, and you take the difference. So that's what you would be doing on every problem. You make these determinations like this. Then you add up the D's and C's, and you know they got the debits got to equal the credits. So in problem one, when we add up all the debits and credits, what do we come up with the balance or retained earnings is going to be? Now, of course, I gave this to you in Word, but you should always be utilizing the Excel documents. But you had it for us, or don't you have it already done for us, Kayla?
Yeah, in the other document, but I don't have it memorized. So I thought you wanted me to like do it right now.
No, you don't have to do it now. We will.
So yeah, it was negative 160.
Okay. So when you did it, it was a negative. So when she did all of that, so put the 160 in. No, just put no. Just put 160 in. Now put a D over there. So it's going to be on the debit side. So the next step that Kayla did was, what did you do, Kayla?
After I had all this, I went and put it in the T accounts.
So each of those accounts would now reflect those beginning balances. So let's just look at cash. And cash is supposed to have 100,000. So go up that to cash. You didn't change the color on it.
Why would I
Say,
change the cut? Well, okay.
you got to, when you're teaching everybody, you got to.
My fault. Let me go change the color once. There you go.
Okay, so she has it in blue, and so you would kind of do that. Put all your balances you put in blue at some point. Does everyone see that now? Where the first thing she's doing is at each account, she's now putting those beginning balances in. You see that, Emerald?
Yeah, I see it.
You put them just like they are. If they're on the debit side on that beginning trial balance, they're in the debit. If they're on the credit side, they're on the credit side. So where's retained earnings at?
I think that one is. Oh yeah, it's permanent, so it's over here.
So notice she has it on the debit side. And we say anytime a company has a debit retained earnings, that's what? That is a bad situation. That means the company's, wasn't doing that well. Are there any questions at this point on where we are?
No, sir.
Can everybody do this part of the problem now?
Yes, sir.
Yes, sir.
Yes.
Yes.
All right, remember y'all said that. Because you will
You
see
gotta
it again.
record it.
You said this part of the problem. Why you?
This first part, getting the balance of
Yeah.
retainer,
Okay.
and then putting those balances in the T accounts. That's our first step in a problem like this. Now, let's go to the journal entry. Any further questions? I mean, this is just, putting those balances in. Let's go to the journal entries. Well, let's just go to your blank. Go before you, just go on the side here to the problem. Let's look at the journal entries right quick. Can everybody see the journal entries that you need to make them larger? Can everybody see them?
I can see him.
Okay.
I can see him.
Make it a little bit bigger. I can't see nothing.
No problem.
Talk about these journal entries. Okay. And remember now, sometimes you can adjust your screen, this picture, to make it larger on your platform. Okay, we were purchased stock from shareholders. So some people were listening last class period, and they know you debited treasury stock and credit cash. When I reviewed a lot of those problems this morning, people were debiting cash and crediting common stock. So you were not a tenant. We purchased supplies on account. Then we're purchasing shoes. And this is where we are in the classroom. I hit Kayla and another bunch of people on the head with a yardstick.
Why?
Because when you purchase inventory, what do you credit?
Oh, you credit, it's an account. You credit on, okay. To be fair, I'm a little rusty, okay?
That right. A couple of people had that right.
Wait, you said it's account, not cash, right?
Yeah, it's accounts receivable.
Accounts payable.
Account, yeah, that.
So when you make that first, so we've done the first two journal entries: debit, treasury stock, credit, cash, debit, supplies, credit, accounts payable. Everybody know that. But when you bought that inventory, remember we said you don't pay the person who delivers the inventory, and you count your inventory to make sure you have it. So how do you think that's going to affect this problem now, Ms. Kayla, if you are crediting accounts payable instead of cash?
Well, got a few things on here that's wrong there. Yeah.
And I don't know why Dawkins didn't pick that up.
Doc is a witness. She actually watched me work on this for like 4 hours because I'm still rusty.
You don't have
She
to.
was there. She saw me struggling.
So she should have helped you. You wasn't supposed to just be watching
I
Dawkins.
was trying to, sir. I was trying to. Okay, I am a witness.
Well, we all make mistakes. We'll
All
fix
right.
it and just move on.
So you got to work not to share your mistakes with other people. So I shouldn't have 80% of the people. So it's good to help and share, but share a journal entry. Don't share your whole problem. Okay? Because then rather than them thinking, rather than they thinking, because a couple of people had accounts payable down, but people tend to want to copy and not think. And so when I'm going through and I see all of these people debiting inventory and credit, some people should have, they picked this up other than the one or two who did. But you can see that's going to be a major impact on this
Yeah.
problem.
Yeah.
Okay. So a lot of the problems, so go ahead and change that cash to accounts payable.
Dang.
On journal entry 3,
Okay, give me a minute. I gotta write this down too so I can fix it later.
okay. Well, you just go ahead and correct it now, you know.
No,
to
I'm
make-
correcting it now. I'm just writing it on my little notepad.
Okay. And we had another purchase, didn't we?
Yeah.
Just make that accounts payable. So that was just a slip, because there were a lot of good things that were done in this problem by Kayla.
I think that was it.
Okay.
Yeah, that was it.
Yeah, it's only 2 purchases. And see, this is important because when we get into cost accounting, you may have, because you're making an item, you may have 5 or 6 different types of inventories you got for making the item. So it's very important that you realize we'd be crediting accounts payable. Okay, so we had a cash sale. So are there any questions on journal entries 1, 2, and 3? Any question on journal? Can everybody make journal entries 1, 2, and 3?
Yes.
Yes, sir.
All
You
right,
know,
let's
this
go to
affect.
journal. All right.
Okay.
Kanisha, you have an issue question? Okay. So journal entries 1, 2, and 3. We bought the treasury stock. Everybody know they can make those corrections because we bought stock, not issued it. We bought supplies on account and we bought inventory on account. I think even one of the new students had that correct because they did their problem and turned it early. And I think they were crediting accounts payable. Now, when we get to the sale, notice that always on the sale, there are how many entries?
2.
2.
Always 2 entries. The sale, and then moving the item out of cost of goods sold. So let's just do the sales part first, and then we'll go to the inventory table. But you sold how many? 4,000 on account for 200. So that was for the 1,200,000.
Mm-hmm. Do you need me to bring up my
It's
my inventory sheet?
6,200. Does everyone see that debit cash credit sale? That's just 6,000 times 200. And we'll go down here to journal entry 6.2, where the sales on account was 4,200. So we debit account receivable and credit the sales for 800,000. Now, to get those numbers for cost of goods sold, what are we going to do?
We gonna find this inventory sheet, sir.
Find the inventory chart.
This one.
Okay, so on an inventory chart, we have the first column purchases, and it has in red the journal entry that you make on the purchase. So what you got there in red, Miss Kayla?
What you mean? Oh, all this says inventory and then cost of goods sold.
No,
I
I
don't have
said
nothing else in red.
it says the first journal entry. I'm just messing with you a little bit, but you got debit inventory and credit accounts payable.
Oh, yeah.
So that was there to remind you. So whenever anything is in column 1, the journal entries debit inventory and accounts payable. When it's in column 2, we debit cost of goods sold and credit inventory. All right, so go ahead, Kayla, with your calculations.
I'm not gonna lie, you kind of lost me just for a second. You
Well,
like just for a split second, you lost me.
how about Dawkins?
Miss Dawkins.
Trying to
Okay.
phone a friend, Dawkins. Come on, man. Like, help. Because you
Now,
lost me. I don't know what you're
y'all
talking about.
remember that, your presentation of the problem is half your points. So if y'all want me to do all the presenting, then y'all are going to get half points.
I guess I'm trying to figure out what you're asking right now.
I just told you to go over your chart.
Oh, that's all you want me to do? Oh, okay.
That's all I want you to do. Don't make it
Okay,
hard.
so the beginning, you see I have beginning right here because we
Correct.
already started with inventory. So we already have 5,000 units that costed $100. So the total is $500,000. So that's the beginning inventory. And then on problem number 3, it said, you good? Press the board. All right. So it said that we bought $5,425. So 5,000 times 125 is 625, and then you move this down to the ending balance. So I have 5,000 that costs 100, and I have 5,000 that costs 125. And then you come down here to problem number 4, where it say you sold 6,000 units for 200.
Okay.
Which
So let's go back. Let me go back for a second. You had 5,000 in beginning inventory at 100.
Mm-hmm.
Okay. So notice now that when you got to this inventory chart, and I didn't see this on some people, you're supposed to bring in that beginning inventory that was on the books. Then was that first purchase at 100 also?
No, the first purchase was 125.
Okay. All right, I got it. Okay. So you have 5,000, and we're using weighted average in problem 1. So what you gonna do to get your weighted average?
Okay, so the weighted average, I'm gonna add the 500,000 and 625 together, and then I'm gonna add these two together, and I'm gonna divide this by this, or the 500. I'm doing a calculator because I don't really like doing that. Okay, so I got $500,000 plus 625,000. That gives me $1,125,000.
Put the
So I'm going.
1,125 below the 625. So because this is weighted average, she adds up her total dollars. Then she has to add up her quantities too. And that's what, 10,000?
Mm-hmm.
So on weighted average, we're not going to use 100. We're not going to use 125. What are we going to use?
We're going to divide this.
We're going to divide 1,125 by 10,000.
And we're going to get 112.5.
So put that 112.5 in there and scratch out the 100 and the 125. Put a strike through those once you get this in. So when you're doing weighted average, you don't use the beginning amount. You don't, the first or the last, you get an average. Is there any question on how to do weighted average? So go ahead, Kayla.
So since they said we sold 6,000 units, I got to use the weighted average cost to come up with the cost of goods sold. So that means it's going to be 6,000 times 112.5, which gave me $675,000. So
Okay, that goes where is that journal entry?
So yeah, that's the second part of problem number 4. The cost of goods sold 675, inventory credit 675. So then we came to problem number 5, where we got 5,000 units at $150. So that total came out to $750,000. So, I pulled that over to the end of balance, and I got to get a new weighted average over here because I have another inventory over here.
Show the calculation form, how you did it. Put your red numbers in.
Question: the quantity of 4,000 with your new weighted average is from number 5, right?
It's from what's left over. Because if you sold 6,000, then
Okay,
you only
right.
have 4,000 left.
No, but she's
Okay.
saying you're doing this calculation to get the amount, I think.
Okay. Yeah.
So you have to go and recalculate every time you make a purchase. You got to recalculate that weighted average. Now strike through those top two numbers. See, the old weighted average goes as well as the current purchase. So now do we see the purpose of the inventory chart? It gives us in that middle column the cost, you see cost debit, cost of goods sold, inventory. That's what's calculated in the middle.
So now we have the new weighted average for this one. So problem number 6 says we sold 4,000 at $200. So the first entry is going to be accounts receivable and sales for $800,000. And then the cost of goods sold is going to be 4,000 times 133.33, which is going to give you, let me redo it again just to make sure, because obviously my calculations was taken at first. $533,000, 533. Yeah, that number. I'm struggling today, y'all. Forgive me.
You good. You good. We understand.
So now you got that number, and then the ending balance is going to be 5,000 quantity, with the unit cost being 133.33, and that's what's left over. Yeah.
All right. So Kayla is still here, but now we'll move on to the next person who wants points today. So in this class, a lot of time I'm basing your attendance quizzes on your talking and explaining something. So if anybody else wants any points today, you can begin to speak up, or we'll just give them all to Kayla. Up to you all. Well, we gave him a chance, Kayla.
Oh, Miss Doctor
Shoot,
getting
I was
together
gonna.
right now, and Cameron, they getting themselves together. Just give them a second. You know what I'm saying?
Give him a second. Okay,
I can
so
explain a few after we go over number 7.
Oh yeah, Professor Boyd, I didn't like what you did, by the way, on problem number 14, and I was gonna tell you about that too. I didn't like that at all, because I'm
Oh
still
yeah.
not even sure if that's right.
Yeah, you need to stop abusing her because honestly,
That was abuse.
like,
I didn't like
that's
that,
abuse.
but we're gonna get there. We're gonna get there. So,
yeah, how did you go from 7 to 14? I know
because
7.
number 7 reminded me of number 14. That's
Well, you
why.
got it right. I don't understand why you don't like it.
It took too long for me to figure that out. It took about 45 minutes of my day. So, hey, but Cameron, you doing number 7, or do you want an explanation for number 7?
Yeah, I need an explanation on number 7, but I can do some
All right.
after that.
Okay, so number 7. It says journalize adjusting entry for second year equipment depreciation, double declining balance method. The equipment has a 5-year life with an estimated salvage of $50,000. So the first thing about this problem is at the beginning, our beginning balances, we already have accumulated depreciation of $160,000. This 160 was the first year of depreciation. So he's asking for the second year now. So the way you do that is, where my paper at that I did this on yesterday? Give me a second. Got a lot of paper over here. Okay. So the equipment, okay. For this, first of all, you're gonna have to excuse me for a minute. I feel like we need a teachable moment because this one right here caught me up. So I know we're gonna go to the textbook on this one.
That's
Feel me?
fine.
Now just give me a minute to let this load up.
Does everybody have their textbook? Anybody have any trouble getting their textbook who didn't have it?
I will get mine tomorrow. I'm
Thank
ordering
you.
online.
Okay.
It's on Cengage, right?
Yeah.
Correct.
Yeah, I can't see. Hold on, cause you know what I'm gonna do. Engage. Cause this one really gave me a hard time.
Kelly, you got some good internet. Who you got? AT&T?
Xfinity.
Oh, because it's moving fast. I need to get that.
Yeah.
Professor Boy, you ain't even have to say nothing. You ain't even have to say nothing.
Okay, so where we at? We are at
Appreciate it.
the
Has our
depreciation.
inventory chopped up. Wow, it's looking good here, I tell you.
We're doing double declining balance, so we'll skip to that one, I think. Did I pass it up?
I think you went too far.
Oh, okay. This is what it say right here. Okay, so double declining balance basically determine the total cost. So the total cost of the equipment is $400,000 because that's what it said in the beginning balance, right?
Mm-hmm.
So then you divide 200% by the life of the asset. So in the problem, it said that the life was 5 years. So 200 divided by 5 gives you 40%. Everybody following that?
Yep.
Wait, so it's
Yes.
always
Yes.
200%?
It's 200 divided by the life. So whatever you say the life of the equipment or the auto or whatever we doing is, you divide 200 by however long the life is.
So it's always 200% on double declining balance.
Okay, so with that, he gave us a salvage value of $50,000. With double declining balance, all you need to know what that is, it can go below $50,000. So you don't need it like off top, but you know that with $50,000, no matter how low this go, it can go lower than $50,000. So with this, I really want to go to this chart first, but that's how I was looking for the chart. It's in here somewhere. Oh, there it is, right there. All right, so we're just going, use this as an example. We're just going to replace the numbers. So year one, the cost of our equipment was $400,000, right?
Mm-hmm.
And then we have the rate is 40% because remember we did 200 divided by 5, which is 40, right? So if we go and calculate $400,000 times 0.4, we get a depreciation of $160,000, which, if y'all remember, on the beginning balance, that's what it already said the first year depreciation was 160. So we got the first year, right? So what we do with this is we go subtract the depreciation from the original cost. So we subtract $160,000 from $400,000, and we get $240,000 that's left as a value of the equipment. And you do the same thing. So now we're gonna do $240,000 times the 40%, and that's gonna give you $96,000 as a second year depreciation for this equipment. And when you go to the problem, that's what mine say. The depreciation expense on the equipment was $96,000, and the accumulated depreciation was $96,000 as a credit. I know that went kind of fast. Is there any questions on that one? Because Professor Boyd be skipping over that real fast and having us figuring it out, and I don't really like that.
Where did you get your 240?
Oh, I didn't put my 240 anyway. So the 240 was just, let me find the internet again. There it is. So you see how right here it say, I didn't put it nowhere because like you don't really. I'm having a hard time explaining this, Professor Boyd. So help me out. Don't let me sit here and
Go
struggle.
back to
So look at watch.
your problem. Go to your problem.
My problem, which
Go back to where you
on
where you have
Excel.
information. Go back to the problem itself. Okay. If you look, the equipment is on there 400,000. So bold the 400. Now go and bold the accumulated depreciation is 160. So you've already taken 160. And so now 400 minus 160 is what?
240.
So put the 240 on there somewhere. Can you get that down there somewhere?
Yeah, actually, I'm gonna do this. Insert column to the right. So now we got.
So put a 240 there. Then put 40% on the next line.
What you mean next sound like right under it?
Yeah, under it on notes payable. Then put 40. Then put your depreciation there. The 96,000.
Yeah.
So does everyone see this now? Equipment costs 400. We'd already depreciated 160, and we're depreciating a declining balance. So
The
there,
first year, right? Cool.
right, 160 was the first year. So that leaves us with only 240 left to depreciate. So in year two, the depreciation is 40% of 240 at 960. Remember, it's always going down. Are there any questions?
So the
So
first
the
year was at
salvage,
20%, right?
Ignore the salvage. What was the other
oh,
comment?
The first year was at 20%. That's why I was at 40% now.
No, it's always
Years
40%.
at 40% too.
Okay.
What's 40% of 400,000?
It's 160.
Okay. So it's always 40% each year, but of a declining balance. So calculate for me the depreciation in year three. So I gave you the third year to do on next class period. Let them do it, Kayla. I want everybody to calculate year three depreciation. Got a camera?
Yes, sir. At least I think I do.
How much is it?
So the depreciation is the accumulated depreciation is 144,000. Then the cost of the car at that point would be 57,600.
So you divided
Oh,
that
oh,
percent
that's
into
nice.
Put another
144, right?
column, Kayla.
Hmm?
Put another column in if you can. Now just use debit credit column. Let's just go there. Okay, so when we get to year 3, we worked it in this middle column. The accumulated depreciation now is how much?
$144,000.
Put in your wait a minute. Let's put the original cost in 400,000, Kayla. Let's put that in first.
The original cost right here, 400,000.
Yeah, just move it over. Yeah, move it over to the middle column.
Okay.
Now, depreciation is going to be what? The 160 plus the what? 96.
It's minus 96. It should be. Wait. Oh, we talking about the total depreciation like
Yeah,
today?
yeah.
Oh.
160 plus 96 is what?
So, $256,000.
So put 256 there. What it's For the 240 is put 256.
Right, like right under it.
Yeah, just take the 240 out and put 256 in.
Oh, okay.
So how much is that leaving us to depreciate? What's the balance that we're gonna work on now? It's 400 minus 256. How much is that?
$144,000.
So put 144,000 under the 256. And we're gonna take 40% of 144,000. How much is that gonna be?
It would be 57,600.
I'll take your word for it.
I'll
It
take my word
is.
for it too.
I'll do it right now. I'm pretty sure you're right.
Yeah, it looks right. Any questions on the 57,600? So you have that chart in the primer. Go to that page and just change to these numbers and work it out, okay? Are the ones you have in your problem. Okay, let's move on. Let's move back, Miss Kayla. Let's finish these journal entries.
Oh, I think Cameron, you're supposed to be finishing number 8 and stuff, right?
Yeah, I was gonna do a few of them,
Okay.
but I'm not sure how to get control of the screen because right now I'm doing it on my phone.
No, you got it. I'll have a screen.
Okay, so with number 8 saying ending supplies 2,000 make adjusting entry. Let's see. So go down to number 8. So since it's saying adjusting entry, we already bought supplies which were 8,000. So you'll first put a journal entry for the preceding entry, which would be supplies debited 8,000, then cash credited 8,000.
Accounts payable. Once we bought it on credit, the accounts
Yeah,
payable.
number 2. It was number 2. 8,000 accounts payable.
Thank you.
Okay.
Then we'll make the adjusting entry. So supplies expense, or hold on. Yeah, supplies expense would be 6,000 for debit. Then supplies would be credited at 6,000
How'd you get 6,000?
because the ending supplies was 2,000. The beginning was 8,000, and the difference between those two got me 6,000.
Sounds good.
Do you need the what's it called? Transaction type 2?
Should be normal. There
I
you
don't
No,
go.
think that's a no. Oh, okay.
wasn't the type 2, was it?
No,
It
it
was a
was
13.
713. So on to number 9. Let's see. Number 9 says paid 20,000 in dividends. So dividends would be debited with 20,000, then cash would be credited with 20,000.
Okay.
Transaction type 10. Okay, then number 10 would be collection on sales on accounts 500,000. Number 10, so cash would be debited 500,000. Then accounts receivable would be credited 500,000.
Okay.
You want to keep on going? You want me to keep on going? Let somebody else get some points today.
Well, we'll let somebody else get some points today. Who
Okay.
else wants points today?
I'll go.
Okay, go ahead. Can't hear you.
Hear me?
Who said they're gonna go?
Hello?
Okay.
All right. So it says payment of on no payables, 20,000 interest, and 50,000 principal. So it would be notes payable 20,000, and the interest would be 10,000, and then the cash would be 50,000, right?
Wait, are you doing 12 or are you doing 11?
12.
Oh, okay.
How much did
And
we
then
pay on the note?
the transaction type would be 9.
Slow down, just slow down a bit. Because I don't. So, Kayla, how much did we pay on the note?
It say right here the note was 50,000 on the principal and 20,000 interest.
Okay. So it's 50 and 20.
50, 20.
Wait, Derek, which one did you have? Did you have the first one?
Which one?
Which
Are
problem?
you-
Which problem did you
Which
have?
problem are you working on?
12?
No, I
I thought
mean
we.
there were 3 versions of it.
4.
I was doing 4.
Oh,
So
that's why. We're on version 1.
Uh,
we're just doing version 1 now.
all
We'll
right.
have time for 4 on Tuesday. Anybody else on version 1? All right, let's finish up, Kayla.
So like Derek was saying, we have $50,000 of worth of principal and 20,000 on interest. So you debit 50,000 for notes payable and debit 20 for interest expense and 70,000 for cash.
Okay.
So problem number 13, you pay your salary expense of $85,000. So you debit sales salary expense for 85,000 and you credit cash for 85,000.
Okay.
Number 14, I ain't gonna lie, I had to go find your YouTube video and come back and do this one because Kind of gave me a little bit of problem. But it says you at the end of the year you sold equipment costing $100,000 for $30,000. So the
So you
very
know
first
two
thing I
things.
did,
You know
huh?
two things, right?
Yeah, I got the first thing I wrote down is I had got $30,000 in cash. So that was the first one. And then I
Okay.
sold the equipment, which is worth $100,000. So that's why it's credited $400,000. But
Okay.
it wasn't balanced, so that means something in the middle happened.
Mm-hmm.
Um, Now I'm gonna keep it real with you. This I honestly I know it's right, but I forgot how I got to this $64,000. Hold on.
Okay. So you know that 2 years worth of depreciation would have been taken on that equipment because of
Right.
that end of year 2. So in the first year on the 100,000, we would have taken what 40% of 100, and that would be what
40%, that's $40,000.
Then the second year we would have taken the 40% of what
60,000.
right, and that would have been what
Um
24,000,
oh yeah.
and that's how you got 64,000. See how brilliant you are.
Like I know I had it yesterday, but it took so long that I was tapped out. So
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 it,
okay.
so you had
So
to do 2 years worth of depreciation on that 100,000.
so that gave me 64,000 accumulated depreciation, but it still wasn't balanced. So here's the thing. I was trying to figure out if it was a gain or a loss. I found out that it was a loss because once I added the cash and accumulated depreciation, it only came out to 94,000, which was less than the cost of the equipment initially was. So I lost $6,000 by selling it for 30. So that's why this entry was a loss on sale of long-term asset for $6,000 on the debit side, which ended up making the whole thing balance.
That's what you're kind of doing. When you sell a depreciable asset, a non-current asset, you got to take out the equipment as well as the related depreciation.
And yeah, that was number 1 through 14
Okay.
of the problem.
Thank you for that.
Any questions on any of the journal entries? So how's that going to impact our financial statements now?
It's gonna look a lot different. You mind if I go fix that real quick while y'all watch me fix this? Cause I didn't realize it's gonna affect my cash flow chart too, but I'll get to that in a minute. Um, so I made a couple mistakes, y'all. So I got to go back and fix these mistakes real
Now, the
quick.
only thing you have is take out the 2 credits for the inventory out of cash and put them in accounts payable.
Well, I have to go back and recalculate the cash now. So that's why I was like, I gotta fix this real quick.
But I'm just saying, just put them in accounts payable.
Okay.
So put the credits in accounts payable. So it should be 2 credits that you put in there, correct?
Yeah.
250 also.
750. Yeah, it's gonna come out with different balances. So, yep, yep.
Wait a minute, let's see. 6. Well, you can fix that later, because everybody
Yeah.
that's going to have to go back.
Okay.
Let's let's move on to the income state, to those financial statements now. We'll go
Okay.
back.
Just so you know, the financial statement is not going to be right because.
Okay, well, that's okay. I just want to look at them for a second. So notice that she took the loss on the sale of the long-term asset and she put it up top so that her gross margin would be lower because it was a loss. If it was a gain, it could have gone the other way. Or you could put those at the bottom of the income statement. It has those items in there. So that's the net income. Then for statement of retained earnings, she just went through her normal process for that. I don't think that will change.
No, just the balance sheet going to change.
Okay. So let's look at the balance sheet for a second. Now we'll have to get there eventually, get that cash corrected. And of course, the only thing changing is what? Cash and accounts payable.
Mm-hmm.
Those are only two accounts changing. Now let's go to the closing entries. In the closing entry, she closes out the revenue items first. Then she closes out the expense. Notice that loss, if it were a gain, and some of you may have gains, it'll be on the other side. Then she closes out the expenses in closing entry 2. Then the net income in closing entry 3 and dividends in closing entry 4. Are there any questions? Now let's go to the statement of cash flow.
I gotta find out too. Statement of cash flow. Where did I put that? Oh, statement documents. Okay. Which is gonna need to be adjusted too because of the issue I had with the
Go
cash.
to the very bottom, first of all, to the statement of cash flow. And one thing that she has here is she has a beginning balance and ending balance, which is the change. So once she gets her beginning and ending cash corrected, then this change is what the top 3 parts have to reflect. So I like the fact that you have that in there.
Oh, I did have a question about the statement of cash flow.
Okay.
So the very first one, the treasury stock and cash, I would like on your template, it doesn't have a place to put journal entry number 21. So I actually just like,
I thought it did.
it don't. I'm looking at it right now.
You're getting it right now.
Mm-hmm.
You got the right template?
Yeah, the one you gave us on the problem.
Well, I'll tell you this. You need some items in part 3. So as you work on this cash flow statement, I'm not going to, but you need 2 items in part 3.
Do I? 18. You're probably right. I gotta look at it again. But yeah, so in the future, where do I put treasury stock on the like cash flow?
When you issued the stock, what part did it go in?
When I issued the stock, it came from investments because it was an investment.
No, this is your own stock. What's the first item in part on what you have?
I don't know.
You said you had a template, correct?
Yeah, the first part is cash flows from operations.
Okay.
The second is cash flows from investment, and the third is cash flow from financing.
Okay. What are the items on the financing?
Journal entry 1 and Journal entry 5, which is issuance of common stock and borrow money.
Okay. And what's on the U side?
8 and 10, which is payment of a liability and payment of a dividend.
For a long term.
Yeah, long-term liability.
Right. And so you need dividends there. But if you issue the stock, if that's in part 3, when you buy it back, it's going to be in part 3 too, the treasury stock.
Oh, okay, so it go on part 3.
Yeah. Now, as we look at these other problems 2 and 3, does everybody see what they need to do? Are there any questions? Some of you are looking at some low points right now.
Oh, Miss Dawkins texted me. She said that she really did want to help out, but she having issues getting back into the class right now.
Okay.
She wasn't just being silent. She's just not here.
Okay. Well, I figured that. She's not talking.
No, sir, I have no questions. Just taking down notes.
Okay. I'll put a resubmit sheet in there for Tuesday so that hopefully you can get some of these points back.
Really
you, Dr.
appreciate that. Thank you.
Anytime.
You're saying we've lost points? I guess I missed what you meant.
Well, if you don't have it right, yeah, you're gonna lose points.
Okay. Okay, I get what you're saying.
Oh,
What was the resubmission date?
Tuesday. Oh, you got to release the screen, Kayla.
Yeah, I'm trying to do that right now. Honestly.
Okay. I guess it's done now. Okay, so number 1, managerial accounting expects that you can do everything that's in that problem. And so you have that problem so that you can see what things you need to work on, because we won't be covering it again. You'll just have problems, and it's going to be assuming that you can do the things from Principles 1. That's what Principles 2 does. A lot of times you get a managerial book and it won't even have a review of financial accounting. It just start on managerial, and you have to pick that up. And so what I do in teaching the class is to go through and spend about a week reviewing financial, because there'll just be subtle things like buying the inventories and on the inventory methods and everything that you'll be expected. Now, I don't want to waste my time looking to give you some partial credit. So I expect when you turn those problems in, I want to see everything, including the statement of cash flow. So you got to have all of those things done and turned into me. We will look at problem 4 for the first part of the period on Tuesday. The second part of the period, we go to statement of cash flow by the indirect method. If we had 1,000 journal entries, we can't use the method that we're using now. And so we're going to spend about a week looking at how we do a statement of cash flow when we have a lot of transactions. I'll be putting into course content the information on statement of cash flow. You might want to review one of the previous YouTube videos on statement of cash flow to get a sense of it, how we're going to approach it, so you can be in a better stead to understand it.
Are the YouTube?
Each
Sorry,
team
sir.
let me finish. Make a presentation a copy of a presentation. I'm going to put a link in there with cash flow. That's the next link. And it will have the examples of what you're supposed to be doing for the cash flow work. Okay. Was there a question?
Yes, sir. Are those links posted on Blackboard, or YouTube links?
The YouTube links on, you have to go to YouTube itself.
Yeah.
I have a YouTube station.
Okay.
I would have loved to have done that, but they're too large, for a Blackboard. So
All right.
they can't handle them. That would have been the easy thing, but they can't handle it. So I had to go and create a YouTube station. Any other questions?
Mr. Boyd, can I talk to you after class?
Certainly.
Okay.
Mr. Boyd, where would you find your YouTube channel?
You just go to YouTube and type in J Boyd Accounting.
Okay, thank you.
You're welcome. It should come up.
When will office hours start? Because I need tutoring badly.
What I'm going to do in office hours, I'm going to try to come on at roughly 10:30 for one office hour. So that office hours, 10 if I need to. So we'll try to have office hours before class. Then we will have office hours after class. Then on Mondays and Wednesdays, let's just look at 2:30 to 3:30. Now you can always, contact me if that doesn't work or you need to meet at a different time. But a half an hour before class to an hour, depending on how much time we need, so that you can check with me about things before class. Then we'll have office hours after class. So, if there are things that are not clear, you can check with me right away after class. Okay?
Okay.
So we'll work with those. So check with me.
Sorry, I gotta.
So just check with me after class today. On Monday, say 2:30, between the 2:30 and 3:30 time frame. And we'll adjust it as we need them. Anyone else?
Yeah, I got something to talk to you about too.
Okay. Well, thanks for a great job, Miss Kayla, and everybody else. So anybody needs to check, just stay on the line. But I think Chase was first.
Yeah, so I forgot to also submit my Excel answers. I forgot to do that. Will there be like resubmissions?
Yeah, you're a new student, correct?
Yes, sir.
Your submission is not due until Tuesday anyway, so I will probably put a new submission in for Tuesday.
Okay. And then also did you receive an email about my letter of accommodation?
Right, I'll work on that.
Okay, thank you.
You're welcome.
You have a good day.
You too.
So on Tuesday for new students, is it just assignment 4 is due or all the assignments?
Just 4, you just got 4.
Just assignment 4.
Yeah, I'll be calling on you, Mr. Wall, to do the first 3 journal entries.
That's fine. I'll be ready.
Okay, sounds good.
Thank you.
You're welcome.
Hey, Christopher Wood, what's going on?
Yes.
So, me and Miss Dawkins had a very spirited conversation yesterday about your requests for these groups. And while we did it, and I emailed you the updated form, I had no problem doing it. It just didn't make much sense to put that as a priority now, knowing that about 25% of your class is going to drop after next week.
You think so?
Yeah.
I don't think these people gonna drop.
Uh,
Most of
I
them
know,
won't. There'll be
huh?
some if they don't show and everything, then that
Yeah,
will.
that too. Like some people haven't shown or like are not in contact with us. Then that's a couple that we know for a fact is gonna drop. You know what I'm saying? Like,
Well,
so
we
it's
drop
like,
them out. So when we do the first presentation is due on Thursday. If a person's not here then, I mean, I have to give them all the benefit of the doubt
well, that's the understandable on your end, but it's like why we're creating groups right now, and
because
it's
you
gonna
got
be
a
hard to say.
presentation next Thursday.
That it was just an opinion. I mean, obviously you got the final call anyway. I was just saying,
Well, what I'm saying, you have a presentation next Thursday. So I didn't
for the
want to
group.
form groups and then say do a presentation. Got it?
Yeah, I guess that makes sense.
Yeah. So we'll look at it and see. It gives everybody a chance, and then you have to make sure, and the groups have to make sure if someone doesn't participate, and it's a very easy assignment, then we know. But eventually, sometime we have to redo the groups at the end of this first period. If people are not showing up, we'll drop them, of course. The best size for a group is roughly 3 anyway, but I do 4, so I have some slack for it. But I have
Mm.
to. Everybody is going to participate, and they don't, then we drop them out. That's a good
Oh,
point.
and am I allowed to resubmit this assignment on Tuesday? Because I actually was not aware I made that many mistakes. Like, it's like, dang, it's okay.
You
You
really
want,
didn't have that many mistakes. You had one thing in terms of the purchase. You did everything right. The only thing you had was, it does carry through, but just the inventory purchases
yeah,
and a couple of, and then statement of cash flow, a couple items on that. But yeah, you can submit with the other. But when you're
okay,
presenting, that makes up for some of the missed points. So that's why I'll be giving people a chance to present, so they don't get all the points then, if they're missing something. So you'll make up points just because you did the presenting, and everybody will have a chance to present. So you and
oh,
Cameron get points today, and other people
But
extra points for presenting.
cool, cool. So yeah, I guess that's it. So that's all we gotta do is make any corrections on the homework that we like, needs to happen and just resubmit by Tuesday.
Correct, and I'll put a link in for it.
Okay. Get to have my weekend somewhat sane because I just knew we
Yeah,
was gonna
because
drop
see, you
on
got this.
Thursday.
See, look. By doing this now, your weekend is free. You just got. It won't take you long to make your corrections. Then you're done. Then you don't have any assignment on Tuesday. Then you have a presentation on Thursday, but that's not a very heavy presentation. Just a PowerPoint slide about uh, fraudulent companies, but that's not a lot. Just have to make sure everybody participate. Then we'll
Okay,
pick it up after that. So we did this, and everybody can work on it and everything and pull where they need to be. Then we go from there.
cool.
Anybody else?
yes.
Yes.
By any chance, did you see my email about my request on a letter of recommendation?
Yeah, I'm working on all of those by tomorrow. But I don't know if I
Thank
saw one for you, Cameron. I saw some. Send it
What?
again.
That's crazy. Yeah, I sent it like I want to say Monday, Tuesday
Oh, okay.
maybe.
I hadn't looked at it yet. I'm catching up all my emails this week. I had to deal with people not being able to get into class, and all of that. I was working on those people.
Okay, thank you. I'll resend the email, but
I'm gonna do all of that by tomorrow.
okay, thank you.
You're welcome.
You know, when he said recommendation, that actually reminded me of something. You sent me an email over the break about a program that I needed to go ahead and apply for. And you know, the funny thing about that is I tried to apply for that program, and then when I tried to pull up my transcript, TSU had pulled some crazy stuff talking about I had a transcript hold, so I couldn't apply for the program in time because they just released a hold on my transcript. So I was like, well, there goes that.
Well,
But
there may be
anyway,
opportunities to get into it. Send me a copy of your resume, and I'll try to talk to the lady about that.
is that, do you have, you know, of any intern? I mean, obviously, like I can just Google internships and probably apply to some stuff, but like I don't like using my talents just anywhere. You know what I'm saying? I'm real protective about my space. You got any internships that you think I should apply to for this summer? Trying to get in there and do something.
Let me work on it and see. Let me work on it and see. I've been working on that.
Okay.
I'm working on that for you all.
Because I don't want to just like apply anywhere. Like I don't really like just devoting energy to BS places. You know what I'm talking about? So
Yeah, I agree with that. But that's why I sent the other one, because they said that was good. But I'll check with them on that to see if we can get additional people in past that deadline too.
okay.
I'll flavor it on that.
All right. Well, I'll be here, so just let me know.
Okay.
All right. See you later.
Okay. Anybody
All right,
else? Okay.
I just sent the email to you.
Okay.
All right, thank you. Have a nice day.
You too. The real, you there? Harris? Brianna?